program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have you with us as we get across what we've seen overnight here at AusBiz, and global stocks mostly higher, while gold and silver prices plunged. This as President Trump said he expected to reach a fair trade deal with Chinese President Xi Jinping when the two meet next week in South Korea. So US stocks were mixed, with the Dow boosted by solid earnings results, some microchip stocks dragging on the Nasdaq, and the S&P finishing flat. Stocks specifically, Netflix missed Wall Street third quarter earnings targets because of an unexpected expense from a dispute with Brazilian tax authorities. Its operating margin for the third quarter came in at 28%, while it forecasts fourth quarter revenue of $11.96 billion. That's slightly above expectations. General Motors shares surged after the carmaker lifted its forecast and tempered its anticipated hit from tariffs. Coca-Cola shares rose after the solid consumer demand drove its better-than-expected results, while diversified manufacturer 3M also advanced after hiking its full-year forecast, bolstered by its focus on higher margin products and cost-cutting. Aerospace and defence companies Lockheed Martin, Northrop Grumman and RTX all raised their forecasts, benefiting from solid demand for defence material. And shares of Warner Brothers Discovery surged after the company announced it's considering an outright sale, citing interest from several potential buyers. But late in the session, the board rejected an offer from Paramount Skydance. And shares of the gold miners fell heavily, tracking the sharp drop in bullion prices. Well, President Trump has said the forthcoming meeting with China's President Xi at the APEC summit in South Korea later this month would result in a good deal, but then added that the talks may not eventuate. He said, I have a great relationship with President Xi. I expect to be able to make a good deal with him. I want to make a good deal for China, but it's got to be fair. Maybe it won't happen. Things can happen where, for instance, maybe someone will say, I don't want to meet. It's too nasty, but it's really not nasty. It's just business. Meanwhile, Bloomberg is reporting that European nations are working with Ukraine on a 12-point proposal to end Russia's war along current battle lines. According to the report, a peace board chaired by President Trump would oversee implementation of the proposed plan. And global money managers are revisiting Japan's stock and debt markets, drawn by the promises of new reflationist government led by the country's newly elected Prime Minister, Sanae Takaichi, the first woman to take the top job. Well, US Treasuries rose for a second straight session, pushing their yields lower with a perceived easing of US-China trade tensions, helping support bids for Treasuries. The two-year yield falling to 3.44%, the 10-year was at 3.95. The US dollar index is up around 0.5% on the day. The Aussie dollar back below 65 US cents. And Argentina's peso has fallen to a record low despite efforts by US Treasury Secretary in his foreign exchange intervention. Well, oil prices have bounced off previous sessions' 5-month lows as investors reassess expectations of a looming supply glut and on the prospect of a trade deal between the US and China. Brent crude futures at $61 a barrel. Copper's fallen 1.5%, iron ore flat at $103 a tonne. And precious metal prices have plunged, with gold down more than 6%, its biggest one-day fall in 12 years. A stronger US dollar appeared to be the catalyst for investors to take profit, with gold having appreciated around 60% since the beginning of the year. Spot gold currently around $4,125 an ounce, while the silver price has fallen around 7%. And Bitcoin is currently trading at around $109,000 US. Let's get across what we're seeing on US markets at the moment. Peter Cardillo joining us from Spartan Capital. Peter, welcome back. Good to see you. Let's start with those precious metals. What are your observations? Obviously, those prices have been running hot. Was this inevitable?
Absolutely. And I just think what happened today is actually healthy for the market. We saw gold down nearly almost 4%, 3.75%. And what really got crushed today was silver. That was down a little over 7%. Yes, I think it was due. And I think this is a a good, healthy pullback. It might last for a day or two, but after that, I think we'll see prices stabilize and we're going higher. All the ingredients for uh, gold prices to move higher as people hedge against unforeseen geopolitical, unforeseen financial crises. For instance, you know, um, the press didn't make a big deal about this, but um, Argentina needed a bailout, and that's exactly what the precious metal markets are talking about. And of course, I'm not suggesting that it's only related to Argentina, but I think within the gold pits, within the silver pits, there's that sentiment that paper currency may run into trouble somewhere along the line. And that's why we see this big rush into the precious metal. And I think we have a way to go on the upside.
Well, it's also had a bid, obviously, on that US dollar debasement trade. Where are you seeing the US dollar travelling at the moment?
It's been holding up fairly strongly, more than I anticipated. And I think, there are several reasons for this. One, as you know, we have not had any major macro indicators in the States now for what, about 18 days, 19 days. And so that's one reason. The other reason is I think there's a lot of hope that there will be some sort of a compromise, sort of a uh, Chinese-U.S. trade deal. And at the beginning of your show, you showed President Trump speaking and saying that, well, maybe yes, maybe no, blah, blah. Well, I think he's basically just hedging himself. But I think that there'll likely be a trade deal. Now, this trade deal may not come into fruition right away. We may have to wait a while, but I think the framework for a China-U.S. Deal is probably going to be the big news next week, and I think that it'll be not satisfying to the United States and not satisfying to China. But both countries know that we need a trade deal and we need it quickly.
What are you seeing in the Treasury market at the moment, Pete? You notice the 10-year yield back below 4%.
Well, I think the reason for that is there are two factors here. Again, one, perhaps a trade deal with China. Second, next week the Fed is likely to, not likely, but I would say it's a pretty good bet that they're going to cut rates by 25 basis points. In the latest comments by Powell just about a week ago, he made it quite clear that the labor market is in trouble. And, if you look at some of the statistics that have come out recently, you'll see that the U.S. economy is divided. Not everyone is enjoying this economy. The more affluent earners are doing well and still have buying power, where the middle to lower middle class and obviously the non-middle class is struggling. And so with the jobs market weakening, the Fed is likely to, at least for now, abandon the fight against sticky inflation. And he made it quite clear that inflation is emanating from tariffs and not from other, not inflationary other products. I don't agree with that. If you go to the grocery store, you'll see that prices continue to go up. But in any event, Fed Powell said that most of it is coming from the tariffs. So he's willing to, I guess, abandon that fight for now and try to save the labor market from going into a steep decline, which would obviously bring us into a recession. So that's the reason why we're seeing yields come down here.
And Peter, what are you seeing on the equity market at the moment? The bulls fairly much remaining in the driver's seat at the moment. But of course, this comes with the backdrop of the latest earnings results. What have you seen thus far?
Yeah, it's very interesting. Today we got some old name, old economy names that came out and gave good reports. And I noticed that if you look at NASDAQ, if you look at the decline in NASDAQ, if you look at the decline in the Russell 2000, it seems that there, at least for today, there was a shift out of the speculative issues into the more solid old economy names. And I think that I'm not sure if this is going to be the trend, but I think we still have room to go on the upside because I think, we still have another 2 to 3 weeks before we get all the big tech names out, which begin next week and the following week. And until that happens, I think the market probably will rise. Will it continue to go up at a vivacious pace? That I'm not too certain about. But I think there's room for the market to go higher. At one point, the market will encounter a pullback. Look, we saw that with the metals today, and that could very well happen with equities. But I don't think it's going to happen just yet.
Peter, thanks for joining us from Spartan Capital.
Thank you.
Let's now get across what we're likely to see on the local market there. SPI futures indicating we are going to fall at the open. They're down 0.5% at this point. And of course, we will have a focus on those gold stocks today, given where the underlying gold price has gone. Stay with us. We'll get across that in just a couple of minutes' time.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.